Hi, my name is John Beauclair. I'm with New State Capital Partners. We're a middle market private equity firm in New York. Our interest in ESOPs started a number of years ago when we converted one of our portfolio companies, Gautier Steel, to an ESOP, and recognized that this could be a great way to align our interests with the employees at a portfolio company, and at the same time, achieve a good partial exit of an investment. So just about 2 years ago now, we closed on a more recent portfolio company called Klein Hirsch. Klein Hirsch is the leading executive recruiting firm to the life sciences industry. This is their market share in that space is bigger is larger than the big private equity firm, or the big search firms that you've heard about, Heidrick & Struggles, Korn Ferry, et cetera. And what we saw in the business was a culture and a commitment that led them to just dominate this part of the industry and build up a collection of just great employees, great search consultants who were driving higher value searches than the competition and doing those searches faster and more effectively than the competition. The customer calls came back as this company, Klein Hirsch, is seen as an absolute essential partner to their partners, to the groups they work with. And so it was, exciting deal for us. We got it closed and we started down the path of working with the team. And the first year of our ownership was just exceptional. The company grew dramatically, and as we watched that happen, we also recognized that all of this growth, all of this value was being driven by a group of employees who we really wanted to find a way to, as I said, align our interests with them and have them be, true owners in the business going forward. So we as I said, just about 2 years ago, after closing the deal and seeing all of this terrific performance, we went to talk to the team about converting Klein Hirsch to an ESOP-owned business. That conversation was incredibly easy. The team understood the concept, understood the benefits. There was immediate alignment on getting it done. So that was exciting for us, and also kind of another step along the journey within New State of looking across our portfolio and thinking about employee ownership more broadly. So we began the process. It was a long process to get the transaction actually completed, and part of the reason for that was that even as a private equity firm aligning with the employees, there are still a lot of issues along the way, some tax-driven, some governance-driven, that you've got to work out with the team. And we did that, worked all those things out, but it was probably a good 5 months of working through the process before we were able to close the transaction. And now, and once the transaction was closed, the new capital structure involved, an outside lender, Star Mountain. So you'll hear from Bruce on our partnership there. But also we at New State now own in the business this structured equity piece that is, PIK note along with the warrants, and the rollover shareholders who were, the leaders of the business when we first made the investment, are now still alongside us in that security. And obviously from a risk-adjusted return perspective, we find it very attractive because this is a 100% S Corp ESOP, 100% employee-owned S Corp ESOP. So we recognize, significant tax benefits that drive increased free cash flow. So it's an exciting deal for us. As I mentioned before, Star Mountain is our partner in the deal. And as we went through the process, we probably reached out to dozens of lenders to talk about Klein Hirsch and find out who would be the best partner going forward. And it was a seamless process of getting that partnership going with Star Mountain. Working, it was great having a partner who already understood ESOPs, so that as we worked through all of the different hurdles that you have to go through, that are regulatory in nature, and just a lot of process around getting an ESOP done. Having Star Mountain as our partner made that process a lot easier, because Star Mountain has a lot of experience doing ESOPs. So maybe, Bruce, if you want to talk a little bit about what you saw at Klein Hirsch, and then maybe I can talk a little bit about kind of post-closing what we've seen in the benefits of employee ownership since we did the ESOP conversion. Oh, Bruce, I think you're on mute.
Let's do that. Thanks, everybody. As John mentioned, I'm Bruce Etroff. I'm one of the senior members of Star Mountain Capital. We are a U.S.-based lower middle market asset management firm. We manage roughly $3.4 billion today, really across the balance sheet. And as John mentioned, we've been an active lender, and we've been an active lender in ESOPs for a number of different reasons. And it's interesting because, as John knows, we actually looked at financing the original transaction with them, and they went with another lender. But one of the things we liked is that, the familiarity with the business. And as John, I think he even undersold it, the team is just terrific. They're entrepreneurial. I like to say we could have them run any of 30 different businesses for us, and they would do an outstanding job. But and obviously the macro trends in life sciences are quite encouraging. So kudos to John and the New State team and the management team, because they obviously continue to grow the business dramatically. The thing about ESOP transactions is that they are complicated, and for some people and for some lenders, it's a quick no without really understanding them. And I always, because I think they are, there's a group of people, whether it's a credit committee or investment committee, who just aren't familiar with them. And so, there's a little bit of a process, as John mentioned, around trustees and valuations and administration post-close. And it sounds like most people at this conference have some familiarity with that. But for us, I think, the heart of it is, as John kind of hit on it, which is alignment. And, probably very few businesses and sectors that need more alignment than a people-centric business like executive recruiting, where obviously our key assets are the people. And so we thought this was a huge positive in the nature of the deal, and that the people who are driving revenue, particularly that next generation of leaders who weren't founders, who did quite well in the deal, but didn't get to take out the kind of money, have the chance to kind of recreate that, years down the road, which again, alignment, making sure that everyone's kind of rowing in the same direction is probably one of the seminal issues when you're in the deal structuring business. So that was hugely positive. And obviously, then there are obviously, just pure financial issues, the tax deductibility of the principal, the flow through status. And so, effectively, the structure is allowing you to repay debt, more rapidly than you could under a traditional C Corp or LLC structure, which is obviously what a good portion of the market is. So you have kind of the intangible benefits, the alignment, you have the financial benefits. From a practical perspective, we don't see the companies run any differently. It doesn't really affect management. Like I did mention, there's a little bit more of a bureaucratic oversight. There is, you do have a ESOP trustee and, different types of activities that one would have, but I view them more administrative in task as opposed to kind of substantive to the business. So we've not seen, and we've got 3 or 4 other ESOPs in our portfolio. And thancfully, the structure itself has never been an inhibitor in strategy, growth, acquisitions, all the things you want your investments to optimize, right? And so in this case, as John mentioned, we're off to a good start. And I think we'll turn it back over to John to talk about the employee reaction. But from our perspective, it feels and looks like any other portfolio company, any other borrower portfolio. with a few maybe additional lines and pages in the report, which is, again, we view as, not particularly restrictive, and just the opposite, because many people don't understand it. When you specialize in something and you have experience in it, it allows you to kind of lean in quickly. But I'll turn it back over to you, John, to talk a little bit about the post ownership.
Sure. And Bruce, you reminded me when you were talking about kind of some of the new overlays that you've got in the business. I think that we have an exceptional trustee here, and I think that that's been a really big plus, and something people should think really hard about as they go in, because if you get a trustee who is willing to dig in and understand the complexity around the business, the complexity around the structure, the complexity around alignment, and valuation and all those things, you can end up with a really good partnership like we have here at Klein Hirsch. But to your other point about kind of what we've seen in the business, you brought up what you saw when you came in, and let me reiterate that for a second, because I think it's a key point. This company has built a culture of team and family that's as strong as any I've ever seen. And so we knew coming in that culture was one that was going to be in some ways a double-edged sword, because they are so committed to one another, so committed to their team and their future and their growth in the business and making the business great. On the other hand, that culture, that type of a culture, is one that sometimes is hard to penetrate. And so we were working with the team on that, and we were making a lot of progress on it. But when the time came to think about this ESOP conversion, boy, that made all the sense here, right? In the world, because you had this team that already were really acting like owners. But then when you really made them owners, it was palpable, the difference in the conversations, because the rollover shareholders, the original rollover shareholders, were hearing from all of their employees now about all their great ideas, all the things they'd like to do with the business. And I think that they felt that the energy of the organization just amped up a notch, and you had people who were really thinking about the future of the business, because they're going to benefit. They're riding along for that, kind of that equity upside in the business down the road. And so we've seen it as a 100% a positive. And look, the life sciences industry, is coming out of the pandemic, and it went through a slowdown, and it's coming back now. And that's something that this team saw and was committed to working through and making sure that we come out the other side, still the strongest and stronger than we are now in kind of dominating search in that industry. And as I observe the business, I believe that it is not a coincidence that those employees who are pushing so hard are actual owners now of the company. And it really, as I mentioned before, it's really taken root within New State. We are generally across our portfolio looking for ways in every company to spread employee ownership across the entire business. Obviously, an ESOP structure is the extreme end, where the employees actually own the company. But we're looking to find a way to have employees own all of our businesses, to have real stakes in all of our businesses. And because we're just absolute believers in that alignment that it creates.
Yeah, no, absolutely. It's interesting you mentioned that, because obviously there are other flavors of employee ownership. Obviously, when you have technology companies, options and those sorts of things. But given the nature of this business, it did feel like an ESOP was a good structure, and you're always looking at kind of public alternatives, when you're in the founder's shoes, right? You're looking at different monetization structures. But this one, it really, I can't think of another sector that almost fits as well we've seen it before. Sometimes it's just a minority interest, and it's a good way. It's a little bit more tax efficient way than kind of traditional options. But when you go all in like this, it does kind of permeate the culture. And you're right, they have a unique culture there, and quite frankly, it's ironic because they themselves spend their day jobs recruiting people away for new positions, and this kind of solves their issue, which is they got to make sure their people stay, and there's just lots of long-term benefits of having a stable workforce in this kind of industry.
Yeah, it's funny how it comes together, kind of a win-win for everyone involved. I think from a perspective of Star Mountain, you've got a business that has that much more cash flow to amortize debt, right? And from my perspective, sitting in those structured notes, I see a return that might not be as high. I mean, candidly, when we converted the company to an ESOP, in some ways we capped our ultimate potential return, and we have the warrants, but it's not, you're not gonna, given the same performance, you'd probably do, if the company continued to grow like it had been, and sell at a high at that same multiple later, and selling the whole company, we probably would have made a bigger equity return. But what we saw here was that, yes, we're limiting our return in some ways, but the tax structure of the ESOP means that our risk adjusted return is one that's very attractive, and at the same time we get this alignment with the employees, and so which is a hard thing to measure. But I can tell you that in the long run, this is a business where if you lost too many employees, you'd be in real trouble. And so you just have that comfort of the employees owning the business and really caring about where it goes from here. Klein Hirsch had very low turnover historically anyway because of its strong culture. But we anticipate that we'll have almost none going forward. So it's we're really excited about the future with the company. The team is really excited about it and performing, and we look forward to doing more of these down the road.
For sure. And I think, look, you highlighted some points early on about just the complexity of the structure. And so it's a little bit of a journey, and it's not these things you can complete in a week or two. So I think at times that can scare people off.
Yeah.
And they are full employment for lawyers and accountants and trustees and administrators. So it's not a surprise there's a cottage industry that's probably listening to some of these events. In that, if you find people who are knowledgeable, I think it was super helpful. Like John mentioned, the trustee, both councils had actually been involved in several ESOPs. There's a well-traveled path, and if you along the ride with people who've been on that path, it's not too problematic. And just because they do represent a relatively small percentage of the marketplace, you get a lot of people in all aspects of the transaction who just say they're not for us. But I think it's probably short-sighted on their part.
Yeah. It's funny because I mentioned Mark Hansberger, the trustee at Klein Hirsch. But you're right. There were, as we got to the end of closing the transaction, and the Zoom boxes on the screen were so small because there were 30 or 40 people on these calls, and multiple pages of the Brady Bunch layout, and every once in a while I think, boy, when the meter's running, everyone on the phone, you recognize it is expensive, right? But at the end of the day, there is so much regulation around this, and look, there has to be, because there's potential for abuse, and you have to make sure that the government has to make sure that abuse is controlled and doesn't happen. But when you really think about it, it was a brilliant decision by the DOL and the IRS to recognize that employee ownership is in the public interest, and so they're willing to make that investment of the tax savings in order to benefit these employees and have them, generate wealth for themselves through businesses that they improve. And so as I looked at all those people working on this project to get it closed, it made you feel good about kind of what the ultimate outcome is. All those people are there for a reason of bringing this opportunity to employees to own, to control their destiny, own their destiny.
And I think it's interesting. You obviously feel this way, but it is a good monetization option, particularly you could also do the full buyout with the structured note model for a bunch of sellers, particularly sellers who really want to reward the longstanding employees.
Yeah.
They could get substantially the value that they thought they were going to get, and yet they can also leave a legacy to the next generation employees to really have the upside. So I think particularly people-centric businesses, it's obviously applicable for, but I think there's probably a greater pool of them. For those of us who are older, we'll remember the ESOP world has gone through a couple different cycles. And
Right.
so I worked on quite a bit in the late 80s and early 90s under a slightly different construct. And I think like you mentioned, I think it's pretty well structured today. And so the guardrails are up. There's plenty of people making sure that you're doing it the right way. And I think, like you said, employee ownership has intangible benefits that are just super hard to measure, but they have to be net positive. And I think this one is good evidence of that.
Yeah, I think as we at New State develop a specialization around ESOPs, we're looking to invest in more ESOPs, and I guess we consider it a real positive that there are so many people out there who just won't take the time to learn about it. It means it means a bigger market for us to go look at. And so and by the way, I also think that more and more an ESOP can be a real alternative to an entrepreneur. When you think about it, if an entrepreneur is selling a company and rolling over into that new business, well, if we at New State are sponsoring an ESOP with that entrepreneur, he or she can recognize almost as much liquidity at closing and have those structured notes going forward and warrants that might, and in that process truly reward all those employees who supported that entrepreneur to get the company where to its ultimate, where it ultimately got. And so we think there's a big opportunity going forward here, and we're looking forward to attacking it.
No, absolutely. We would certainly agree. And then, look, as we all know, we're going through its own cycle in the capital markets now. And so if anything, as kind of exit options diminish, if anything, more traditional ones, I would think that ESOP transactions probably are more frequently raised, because I think we all know that the traditional sales market, probably, and certainly the IPO market is due for a slight cooling off period, as we finish up this year and look at next year. So
agreed. So, well, and Bruce, it's been a pleasure getting this going with you. I'm hoping we can do more in the future. So I
likewise, John. Yeah,
this one and more. So
absolutely, it's been a pleasure. So
great. All right. Well, thanks. Appreciate the conversation.
Yep. Thanks, everybody.
Thanks all.